Good afternoon, everyone, and welcome to TBR's webcast, Evolution and Outlook for Carrier Cloud. My name is Allison Crawford, and I will be your host for today's webinar. Operators are leveraging cloud as a strategic growth area to offset declines in legacy enterprise revenue. Operators are driving investment in data centers to support cloud development and portfolio expansion to offer new and unique cloud services to customers. Today, we'll discuss how cloud is impacting the telecom market and what this means for your business. But before I pass this over to Michael, there are a few logistics I'd like to cover with you. First, we're recording today's session and we'll be posting it on our YouTube site, TBRI channel. We encourage you to visit this channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. Michael will address them at the end of the presentation. Or if you'd like to set up a client inquiry for a private discussion, please reach out either directly to Michael or myself at the end of the presentation and we'll help you set up that conversation. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. And we'll share all these social media links with you again at the end of the presentation. Now let me introduce Michael Sullivan-Trainor. For the last 7 years, Michael has covered the telecom vendor and service provider landscape. He has extensive insight into emerging trends and is the content and consulting lead for the networking and mobility practice. He is frequently called upon by our clients to provide strategic insight to help navigate the shifting market landscape. And with that, let me hand this over to Michael.
Thank you, Allison, and welcome, and thank you for attending this webinar on Carrier Cloud. So today we will cover what is Carrier Cloud, how it's defined and how it's growing in the marketplace, where the revenue and spend is derived for service providers and for the suppliers operating with the service providers, what steps carriers are taking to advance their revenue and growth in Carrier Cloud, which of those carriers are leading and where they're making their investments, and which suppliers are leading so far and where their investments are going as well. But first, I want to talk about where the source of the data can be found for this readout. We are here talking about TBR's Carrier Cloud benchmark, which we launched this fall. Here we are benchmarking the largest carriers, largest service providers who are deriving substantial revenue from Carrier Cloud services. They're depicted here. And these are categorized based on the scale of revenue they're acquiring and are operating on a global basis, so all multinational players. The benchmark itself highlights total cloud service revenue for these players, divisions of public and private cloud splits, the infrastructure as a service versus other cloud services, and then digs deeply into the geographic segments, Americas, EMEA, and Asia Pacific. And it's important to note that we've been tracking Carrier Cloud and service provider cloud activities for quite some time, but it's not until now that we have seen substantial, consistent revenue development and a good growth curve and growth opportunity for service providers, which is why we initiated coverage of Carrier Cloud benchmark at this time. So with that, let's talk about where Carrier Cloud fits in the strategy of service providers. Service providers in today's market, of course, are in the middle of a major transition from a vertically integrated model where controlling content and delivering services was tied to the network and easily controlled by the operator by delivering the network and the applications enabling technology on top. This ownership shift has occurred with the advent of the over-the-top players, the advent of various kinds of competition, essentially the breakup of the ability of the service provider to deliver a vertically integrated model. So the service provider is tasked with delivering a horizontally integrated model across what we call and many others call a digital value chain, so digital services. And at the center of this is a focus on the customer. So the operator becomes less focused on what the network can provide alone and how the network can deliver the services to the customer in a way the customer wants those services delivered. So customer experience, customer enablement, and the opportunity to do so addresses several market segments. So over-the-top players, content service providers, M2M, different flavors of devices, verticals, and most certainly the subject of this webinar, cloud. So we see the delivery of cloud services as an integral part of a customer experience-focused operator and a key part of the transformation that service providers are going through even as we speak. So why carrier participation in cloud? What's special about carrier cloud and the service provider approach to it? Well, we see that today's cloud, to a large extent, has the enterprise and the medium and small business customer essentially flying blind. And what we mean by that is they have limited visibility, in some cases no visibility at all, to the aspects of the network that are involved in delivering cloud services. And this is, of course, quite a challenge when dependency on the network is integral to a cloud delivery model. Service providers are able to provide this visibility through openness to monitoring the network activity integrated with cloud service. They're also able to guarantee reliability and provide security, a combination of cloud service and the network. So there is a clear still opportunity for them to leverage network assets integrated with cloud services delivered to the large businesses and SMBs as a unique proposition in the marketplace. So this, we feel, is the opportunity for the carrier, and with support from the supplier, to enable customers and prevent them from having to fly blind with respect to their cloud instances. In short, they're able to evolve the carrier cloud, or the cloud itself, to a controlled, secure, and trustworthy environment, someplace where the enterprises and business users can be comfortable leveraging cloud services, acquiring the quality of service and scalability and reliability that they would like to have, they're used to experiencing on their internal networks. In other words, they can deliver a nature of cloud that's a level above what might be termed the common cloud, or at least the commodity cloud. And this, again, is an opportunity that is uniquely at the disposal of the service providers to bring into the marketplace, and there is evidence that it's beginning. But I would say, although many service providers have been in this area for a number of years, the tight binding to the network and utilization of the network value with the cloud services as a differentiator is really just getting started. And that's another reason why now is a time to pay attention to carrier cloud in a way perhaps that you may not have done previously. The other thing service providers can do that's different is there's a combination of being able to leverage global and local brand and infrastructure. Many of them have national brands and international deployments that allow them to address concerns of enterprises such as data management, data localization, and deliver more efficient application integration and application customization to those enterprises in the local market or the national market using the global infrastructure. And again, this is an area where the service providers can leverage other parts of their business to really differentiate how they deliver cloud services. So where's the revenue? How is this going? How much are carriers acquiring from this nascent, the legacy approach to cloud they've taken, and the nascent approach to a more reliable, high quality of service, ideal cloud? So here we have, as a product of our benchmark, a quarterly tracking of the revenue for those top Tier 1 service providers operating on a global basis. So this is not all cloud revenue for carriers. It is only for the Tier 1 players, and it is depicted on a quarterly basis. And we can see scaling up to roughly $1 billion run rate. And as we know, a $1 billion run rate in the scale of carrier business is really not all that exciting. But what is exciting and interesting here is the speed of growth, as we have documented it growing on an average of 30% per year in the cloud, carrier cloud piece of the business. And where is that growth, or where is that investment taking place? Well, it's been continues to be led by North America for the reasons that there has been a concentration, continues to be a concentration of multinational players who leverage carrier cloud and start with a significant base of operations in North America. There is also a high adoption rate of cloud and a greater trust extension into cloud by the North American players, particularly the United States, which drives the scale of that market. That said, there's been a long time investment in carrier cloud and clouds of different flavors in the other markets, in EMEA in particular, and EMEA is certainly a strong market, economic issues notwithstanding, and we see it has significant continued growth as a major region. The up-and-coming region, of course, as it has been in many areas of the service provider business, is Asia-Pacific. And this is because there's a relatively small number of global players who have taken on a full-fledged cloud play to the extent of some of the Western players. And we'll spotlight each of these regions and their key players in the upcoming slides. So given the carrier cloud's opportunity and the growth trajectory, the opportunity for differentiation, where's the spend? How much are our carriers investing in carrier cloud, and why aren't they spending more? So here we see a representation of the average breakout of spending by a carrier off their total CapEx. So what we're showing here is a network and other. You can imagine those would be traditional network infrastructure investments, all of the areas the operator has to invest in to have an ongoing business. Then very often cloud is delivered within the function of a enterprise or business solutions business, at least today for most global carriers. And so we see the remaining pie slices are about the slices of the business solutions business. So other business solutions, non-cloud business solutions, mostly network services, traditional network services, IP network services, are that 15%. And then data center services, managed services that are not cloud, although more and more data center services are becoming cloud enabled, is roughly 5% of the spend, and then the remaining 5% is the cloud spend that we're identifying here. So given that scale of spend, it is not surprising that perhaps the revenue growth is not as striking or as high volume as might be expected. Also fully clear that a great deal of the attention of the operator or the carrier is not focused on cloud. It is focused on the network and others certainly, and it's also focused on other aspects of business solutions. And cloud's an intriguing growing area, but it's not necessarily something that's dominating the attention of or keeping the carrier up at night from a, well, how's my revenue volume going to come from cloud? Although one can argue that perhaps it should, and perhaps going forward it will. So what's behind this? Why not taking the obvious points that we've made so far? High opportunity for differentiation, unique cloud service capabilities, unique infrastructure, unique proposition to the enterprise, and clearly a high investment capability, just the scale of operator or service provider CapEx and OpEx, even more aggressively shifted in this direction could create much more significant play. Well, on the side of history, a couple of things have occurred. The first thing that has occurred is what we call the AWS or Amazon Web Services effect. The carriers, in our view, have been looking for a solid, sustainable cloud strategy for a while. The first one that was tried was done through the consumer lens, which is a dominant lens for many of the carriers, talking at an executive management level. And this has meant pursuing a commodity cloud vision, trying to be or compete with the Amazon type of commodity model, the Google type of model, and this clearly has been not a success. The speed to deliver service, the low price point, and the lateness of carriers to recognize and address that opportunity, it has not paid off. In fact, we would say they've essentially lost the consumer game as far as cloud and commodity cloud is concerned. The good news is the next stage of the game that's open to them is this quality of service enterprise-directed cloud, where we do see the revenue growth occurring. However, while they were pursuing the consumer game, and some are still doing that, other players got involved with, well, they can post up cloud services as well, particularly to support managed private cloud. And offer cloud integration services, a collection of services that are very appealing to the enterprise. And here you see our tracking of that. We have parallel investigations and tracking going on at TBR that look at virtually all aspects of cloud. And this is from another benchmark, our managed private and professional services cloud benchmark. And we are showing here some of the players who have begun to take up the space that the carriers haven't yet fully addressed while they were in the consumer mode. And IBM and HP stand out as clear examples of that. Very recently, we see Cisco beginning to dip a toe in this water, and a lot of integrators, software companies, basically anybody that can stand up cloud services delivery to the enterprise is diving into that marketplace. And we do see a couple of data points for carriers. In fact, promising high growth rate there for AT&T, which has begun to become more aggressive in this space and continued its investment. And we see that this is a space that is not lost by any means by the carrier. In fact, due to the advantages we talked about of the network, there's a lot of opportunity for differentiation in this space. So we see the carriers coming forward and having a play in this managed space, and in different flavors of quality of service in the cloud, moving beyond their AWS view, moving beyond what some of these players can do into something that's uniquely possible for the carriers to accomplish. So how are they going about doing that? Well, the investment it has grown over the years, and particularly tracking it even this year, we see continued acquisition in the cloud space, acquisition of technology, acquisition of additional data center footprint. Is very much a global game, multinational and regional competition. Coverage of multiple theaters by these top tiers is definitely one way to continue to scale. And also continue to find ways to differentiate cloud from any of the other players we saw on the previous slide. They are also more aggressively, I would say, this year than in the past, increasing partnering to accelerate cloud adoption. It has been a bit of a case where the operators, service providers have said, well, don't want to partner because we're giving up part of our value proposition. And I think that is true if you think that the value proposition is only in the commodity cloud or only in the kind of cloud that can be hosted by an IBM data center, divorced from a network proposition. If you're planning on competing there and you go to a partner, you are essentially giving up that piece of it. And I'd say those kind of partnerships are okay because the major focus of the carrier business is not the commodity, and it's not the network divorced data center. It is in a network associated cloud that leverages managed services. And in fact, we see movement in value that's going to support the service provider because service providers have had the investment in public cloud and private cloud. What we see the market doing is growing towards hybrid cloud. And who is better positioned to address the brokerage between clouds, the mediation over a network between a public and private cloud than the service provider. So hybrid cloud is probably the most significant opportunity for the service provider to demonstrate the differentiation it can bring across to the network. And so we feel that's a strong way in which they're going to continue to grow revenue. All of that said, they need to continue to build out their capacity in terms of data centers and their capacity in terms of the depth and breadth of cloud services, which many of them are doing. So going forward, we see not only a building out of the footprint and of the capacity of the data centers, so more sort of the generic or horizontal ways you can address the marketplace, but a deepening of the penetration of their installed base or of their business segments or vertical segments. And I think hybrid will be a key tool to do that. So here we see going forward over the next few years, continued installed base penetration, those multinationals, those nationals, medium and small businesses that can be brought into the cloud's services that are provided by the network provider, by the carrier, will be addressed and deepened. So there's a lot of room for growth there. And it's all contingent upon that ability to differentiate those services. And then the ability to create more scales and choices in cloud menu for SMBs. We see that happening as well. And then we see the deepening of the cloud into verticals. And here, there is a strong value to the fact that the carrier cloud initiatives for service providers is hosted within the enterprise business services. Here's where they can associate with the vertical expertise that is there to do the kind of integration and build out of private hosting or hybrid or dedicated cloud services for cloud communities. See a lot of rich activity there, and of course it's been an area that carriers have addressed for years. We see the attention increasing. Very interestingly also, speaking to different adoption levels inside of the enterprise, so we have some data of that as we're also looking at the end user side of this. There is an increasing interest in adopting cloud services on the part of enterprises and the part of business users, and that's helping meet the carrier's initiatives as well. And we also feel that there is a quality of service that enterprises are looking for, reliability and ability to put closer to, if not full-fledged, mission-critical applications on cloud that in the next few years the carrier will be able to service in a way that, again, we feel few are other positioned to service. So the long-term look is continuing to see this revenue growth, and it's fueled by spread of regional footprint, spread of capacity, deepening of capacity, penetrating the install base, reaching out to other segments, but maybe most especially addressing the mission-critical capabilities of the enterprise through a combination of private and hybrid clouds. So let's look at the providers themselves and see where they are positioned on a regional and global basis. This is our view of the top-tier carrier cloud providers, with the size of those bubbles being about how much revenue they're making. This is a quarterly view again, so the run rate in the hundreds of millions, and the growth rate. Can clearly see there are some pretty significant growth rates, and all of them have robust growth going on. And we believe the hundreds of millions are going to quickly continue to accumulate over the course of the continued participation in the market and the trends we just talked about. So here it's clear that NTT has achieved a high revenue volume and high growth position, and we've seen them as be perhaps the most aggressive in terms of going out and acquiring all the different flavors of cloud service provisions that they can, coming from their domestic base and going out into an international base, having strong footprint in the U.S. market, in the European market, and of course in their home market, offering different kinds of services, branching out into VDI, virtual desktop infrastructure, leveraging assets like owning the Verio hosting service so they can reach out to smaller businesses in the U.S., and acquiring and partnering to develop cloud services in a very specific and broad way, perhaps a little bit divorced from what a lot of the other players are doing there. If you look at maybe we will look at that, the other players, traditional players, kind of built their cloud service business as an offshoot of their legacy network services business and their legacy business solutions area, and we still see that's how it's looked at in terms of revenue measurement and a number of other things. And we believe that hampers some of the ambition around cloud a little bit. And we think NTT achieved a bit of a higher trajectory because it thought about and addressed cloud differently, didn't have a lot of the legacy network services, in fact, had more data-centric kinds of services, and so leveraged its acquisitions and its strategy to project itself into this position. So that said, nothing is locked in stone here. We have high growth rates. We have relatively small revenue being garnered, so anybody could make a move here that could significantly change the competitive or the benchmarking landscape. And we will be seeing continued growth here and tracking this with investments that come forward as we do this benchmark over the course of the coming years. So let's look at some specific areas such as the foundation of cloud. Despite the fact that there are all these other areas that we've been talking about from a revenue standpoint, we believe it's still about infrastructure as a service kind of basic cloud compute kind of capability as the key revenue driver, so to say, the majority of revenue coming to these service providers. But the other areas are growing and expanding that revenue platform. And it's been that kind of data-centric compute focus that NTT has been able to scale and spread globally that's caused it to have the position we talked about. So the IIS chart looks very much like total revenue chart at this point. There are some slight changes there where some of the players, Telefonica, Vodafone, have been less, they're a little bit later to the party. They've missed a little bit of the early IIS opportunity, so they're trying to come in with more, actually more relations to their mobility play or their network infrastructure play. And so some of the way in which they're hitting the market isn't going to allow them to obtain as much IIS revenue. Nevertheless, they're in the market and they're growing and they're making moves now. Of course, Vodafone's leveraging cable and wireless acquisition, and Telefonica's made some recent decisions to be much more present in the cloud marketplace. We'll comment on a number of the other players as we look at things regionally, but we see significant opportunity here to grow beyond this space, and we'll be tracking, as I said, our benchmarks divided into IIS and other cloud services, and it's about trying to understand which of those other cloud services are going to provide enough critical mass for us to disaggregate those and view where that growth is coming, because there's a lot of individual solutions associated with carrier cloud in today's market. Last thing I should say before we leave this slide is China Telecom being highlighted here. We'll look at them again in a bit in APAC, but China Telecom has also put its cloud stake in the ground and also begun to expand aggressively its portfolio of cloud services and data center propositions, mostly in the domestic market, which is certainly a fine market to scale from and scale within, but increasingly looking internationally as well. And when I think about dynamic changes, I would not be surprised to see China Telecom try and move in the same multinational direction that NTT did, getting out of its domestic market once it feels it has reached a level of consolidation in the domestic market. So these players still have a lot of room to grow and compete with each other. So on the next view here, we're going to now drill into the individual areas of the geographies and highlight some of the carrier positions in the geographies. And so clearly in the United States and North America market, the chief focus is on the competition between AT&T and Verizon, as it is for most things in the service provider space in the North American marketplace. Significant progress in revenue acquisition towards cloud is evidenced by CenturyLink, which has basically turned its strategic direction towards cloud. And I think it's a great case study in what you do if you're a traditional service provider and you want to have significant leverage of cloud capabilities. the big move, of course, is you have to go ahead and buy that capability with the SAVIS to get fast time to market. But after that, it's more than just letting the acquisition sit there as a sidecar to the overall business. It needs to become the center of your operation, and with the creation of the CenturyLink technology solutions, really bringing SAVIS into the company and a number of other areas where in PAS and IAS that CenturyLink has moved forward, we see them as a really strong mover in the North American marketplace and continuing to do so. We also see a pretty significant footprint by international players in the North American marketplace. NTT is present there with significant growth, and as well as some of the European players. Getting back to Verizon and AT&T, AT&T, of course, has begun to move aggressively into more cloud partnering with its NetBond offer, most recently with other data center providers like Equinix and some of the commodity cloud players, and its partnership with IBM, of course. So we see AT&T as playing a strategy that leverages both what it can deliver on its own and much more aggressively what it can deliver with partners, bring that network proposition not just to its own service offers but to those of partners, and that's a significant reason why they're getting some traction in the marketplace now. Along with AT&T is Verizon, and both companies do leverage cloud as part of their business solutions or vertical enterprise business with vertical market focus and integration services, network services. And we see this is both an advantage and a disadvantage. The advantage is it allows for the synergy across those kinds of businesses direct to the enterprise customers. The disadvantage is from a strategic viewpoint, it is essentially buried in those business solution areas. If we just take a look at Verizon, which announced its revenues for the quarter today, we see that overall the global enterprise revenue declined by more than 4% year over year. The strategic services was the bright spot, but that was only a 1% growth in a $2 billion business. And if you think about cloud, carrier cloud, this business inside of that very low growing $2 billion business inside of a business that's essentially declining, it's hard to understand how actually not hard to understand how executive management might look at that and say, this cloud thing, not so hot. We probably don't need to invest in that because we don't really see it lighting a fire in the business. And our contention is that breaking out and understanding carrier cloud in this way, seeing its growth and trajectory, is something that the service providers should look very hard at and try and understand that we see it as one of those areas that's going to essentially overshadow business solutions and the traditional legacy services that enterprises have used over time. And it's hard, I think, for some of the service providers to take that perspective given the way the balance sheets are structured, so the revenue models are structured. So that is the other thing that's important here is understanding the way in which the strategy is taken. So if it's coming from a business solution standpoint, maybe rather a pure cloud standpoint, we just talked to AT&T thinking about the NetBond strategy, and we talked to NTT's approaching things more as a data play. We see Verizon tending to understand it's still about connecting or beating or somehow working the commodity side. So their most recent announcement was to make their connection services available to Amazon Web Services. I feel like they probably shouldn't worry so much about Amazon. They should be moving on more to the enterprise focus. And then another major announcement had to do with GE and the M2M, or the industrial internet, which is interesting, but a bit of a distraction from, I think, this mission-critical drive towards hybrid cloud. So the different ways in which operators think about carrier cloud strategically and from a revenue standpoint can somewhat dampen what we see as the opportunity area. And so it's very important to break through that and come up with, as many of you may be involved in the cloud side of the carrier business have been doing probably for years, to evangelize and build on that, use information such as this, the benchmark, and what other carriers are doing to understand the opportunity and the scale and the growth of the opportunity here. So let's move on to the marketplace for EMEA. And in EMEA, we see a significant, slightly similar pairing, although their businesses are very different, Deutsche Telekom and British Telecom. And we do see growth and significant revenue volume from other theater players like Orange and Vodafone and Telefonica. And we see the values of penetrating in the EMEA market from the non-theater players as well, the Verizons, NTTs, China Telecoms, and so on. So trying to leverage that multinational footprint. And then the Deutsche Telekom story, of course, has a lot to do with T-Systems. And in that way, it is similar to BT, this strong global services arm already embedded in the enterprise systems integration, hosting, managed services business, bringing cloud into that and having that be a leverage point and deepening an already strong play towards verticals and towards providing that mission-critical application for businesses. I think that positions BT and Deutsche Telekom well to continue to grow in their carrier cloud revenue. And we see both of them going through continued investment and growth there. In the last year or so, BT has expanded its capacity and footprint in regional data centers in the EMEA theater, despite the economic issues. We see Deutsche Telekom increasingly looking for new ways to deliver cloud, partnering with Sugar CRM, for example. We see them being one of the first players to get on board Cisco's Intercloud initiative. In fact, they're kind of the flagship for Intercloud in Europe, really recognizing that role of the carrier to be able to be the broker between clouds. We think that really speaks to hybrid cloud coming down the road. But it's also the fact that there is a partnership here with suppliers that can also stimulate new ways for the carriers to make that proposition of quality of service matched with their ability to address the local market and the needs of the businesses that they're able to address. So Deutsche Telekom, BT, the leadership story in EMEA, but again, additional investment going on by other players, and none of the players can afford to be stagnant in the marketplace. Should also mention that both BT, but even perhaps more than BT, Deutsche Telekom, have placed cloud as a strategic focus for them rather than it's enterprise solutions and we happen to do cloud as part of enterprise solutions. It is we do cloud. And behind that will come other parts of our proposition. And I think that's a very important strategic choice that will, in fact, be a magnet for the revenue growth that turns the company in that direction. And the thing to follow, of course, is more investment, more turn of OPEX and CAPEX towards cloud investments to expand that proposition. And we think these kind of carriers are going to do that, especially as some of the other distractions of the market become less significant, the rollout of LTE and things like that, where there's going to be a search. There is already a search for new sources of revenue. So cloud is going to be a magnet for that kind of investment. So let's look at the Asia-Pacific marketplace. And no surprise, given what we saw earlier, that NTT should be well placed in that market, and it is. Significant revenue, significant growth off a domestic base, but a really strong multinational flavor. A little bit less multinationally oriented is China Telecom and Korea Telecom, yet because of the size and intensity of their domestic markets, they end up showing up here significantly with strong growth. End of the day, though, we see right now a two-tier APAC market. For those kinds of players, the dominant Asian-based players that can use a combination of their price points, understanding how to cater to the businesses in the Asian market, and the local relationships, the trust relationship, the brand, as allowing them to differentiate from a lot of the other players that are trying to extend their carrier cloud capabilities or have them in Asia, but just haven't been able to grow them at the same volume. And there we see virtually all the major European and North American players. We see some new investments and growth in carrier cloud coming from folks like Bharti with the help of the partnerships with its suppliers. And we see Singtel being significant, interesting for its scale, but projecting itself multinationally within the region in order to achieve revenue. So there's an ability to really get value out of the network cloud combination for different scales of operators. And when we're talking carrier cloud, we have almost by definition focused on the very largest global carriers, but we see some multinationals beginning to show up on the radar screen in their domestic theaters as well. And perhaps that's good news for the bulk of the other carriers out there and for suppliers trying to service those carriers, but it might also be a challenge for the global carriers who have stakes in the market to be more dominant and build more scale. And to that, I would answer it's also about penetrating more deeply into the enterprises and mission-critical applications, and perhaps they will be able to do that more significantly than the smaller carriers. So let's move to the final piece of the conversation, and that's around the suppliers. So there's a significant engagement of suppliers. You have here a qualitative view where we have what we have been tracking from our other benchmarks as the business performance of the various suppliers compared to their technical capability, that is to say the breadth and depth of their portfolio, the ability to deliver what carriers need in carrier cloud, everywhere from the server and storage aspects of the stack to the virtualization aspects, and then the application delivery on top of that, and certainly the systems integration on top of that. And we place IBM in a significant position. IBM's got the ability to be both an arms dealer and a direct supplier, and its position as a key relationship in multinationals and enterprises really gives it a great opportunity to leverage its ability to push the business performance from its services side, as well as deliver on the technical side for the service providers. A similar player of that nature has been HP, and HP continues to sort of readdress itself to this market and to markets in general. And we think that's a bit of a reason why it's fallen back a bit compared to, say, a Cisco. Cisco, particularly with carriers and particularly in the last year, has come on quite strong, not only with the intercloud proposition, but has been steadily building up its, since the years ago it introduced its unified data center solutions. Cisco's positioned a strong stake in the carrier cloud marketplace and continues to see that strategic opportunity as a supplier, almost increasingly as much as any of its other areas in the network. And that's a significant lesson for service providers, suppliers to service providers. Then we see EMC and VMware, which in many ways are a de facto standard in first the enterprise businesses of most of the operators, and then the virtualization of data centers, which naturally forms a platform for the cloud services, and EMC in particular is becoming more aggressive in how it's bringing cloud proposition forward to the carrier space. So we see them as having a significant capability to leverage that position. And then the cluster of more software-oriented players, SAP, Oracle, to some extent Microsoft, are leveraging that end of their business, so they have that relationship with the enterprise to deliver the software platforms for ERP or for data management, and working closely with the carrier to leverage the network to accomplish that. So partnership or a sales relationship, these are all strong ways in which these suppliers are able to move forward and capture value. It should be said, just to mention, the traditional network equipment providers in the last couple of years have woken up to this opportunity as well, primarily because when it comes to delivering the network quality of service piece of the cloud proposition, these firms are very well positioned to do that. And some of them, such as Huawei, have gone as far as deliver an entire data center infrastructure, so they're able to compete from a product capability from the network all the way through to servers and storage and applications. But it's relatively new. But we see, as happened with Huawei in the past, there's very little stopping them from growth. And if they're riding a multinational play from, say, a few of the Asian operators where they're well established, some of the EMEA operators where they're getting established, we can see them offering a challenging position to some of the existing players. Folks like Alcatel-Lucent and Nokia are finding that their play here is going to be more discrete, looking for differentiated areas of the network where they're going to support carrier cloud initiatives. And then we see Ericsson putting its portfolio in and getting more aggressive, although not making that investment in the underlying infrastructure beyond the network, choosing to partner for that. But certainly from a systems integration and services standpoint, both managed services and professional services, Ericsson's got an opportunity to really develop its marketplace position as well. So that's a brief look at some of the leading suppliers. We had IBM, HP, Cisco in what we would call the early days of carrier cloud, establishing the most aggressive positions. We have more and more suppliers entering and being more aggressive in this space as cloud becomes more diffused, but also ones that choose not to neglect the carrier, but to focus on carrier to align a strategic play the carrier is making towards its carrier cloud and enterprise play with the kinds of infrastructure and enterprise support and channel support that they can provide. So there's a strong backing of supplier strategy enabling this carrier cloud phenomenon as well. So that brings
Michael,
us to
before you move on, we just had one quick question that's really relevant. We had a question to explain what business performance capability means on the axis here.
So it's a combination of business performance, what revenue we have seen acquired from providing services to the carriers for cloud. So it's a view of revenue, and it's a view of ability to focus on that as a business. So it's really the monetization. Think about it that way. What's the company's ability to monetize carrier cloud? Can they address that vertical? Are they achieving revenue from that vertical with their business proposition versus the differentiation technical capability, which has to do with the technical features of their solution? And we can come back to that again after if you would like. So we're at the conclusion, and we'll just highlight what we've delivered here. What is carrier cloud? Is services above and beyond the common cloud, services that do leverage off of managed cloud services, managed private cloud, but very definitely bridge into differentiated hybrid cloud capability that we think carriers are best positioned to deliver. And we see movement in that direction, and the adoption of hybrid clouds that's beginning to move in the marketplace is going to be an important play for the carriers to follow or to leverage. Where's the revenue and spend? We see tier ones beginning to get continued revenue growth to the point where it's accumulating year by year to be of significant value, even vis-a-vis the way they positioned it inside of their enterprise businesses. Those that have done that, those that have chosen to make it purely strategic are able to look at it a little bit more clearly. In any case, if we project out, if we continue to have this conversation over the next few years, this number and this marketplace is going to be much more significant in terms of the revenue generation for the carrier. And alongside that, as revenue goes, so goes spend. We will see carriers follow that with additional spend, not just driven by the fact of the growth here, but driven by the fact that the venues of spend where they can grow and develop new business is becoming more narrow as other marketplaces for them become more saturated. And it also aligns with a customer-centric approach to the marketplace and able to leverage some of the new agility the carriers are working to deliver internally. As we talked about, they're taking some fairly traditional steps to get there. They're rapidly acquiring adjacent players or players in regional marketplaces. They are opening up the breadth and depth of their partnerships, even in coopetition ways, the AWS Verizon relationship, you could argue the AT&T Microsoft relationship. Some of these that would have been anathema to anyone pursuing cloud business before, now because the service provider, the carrier, can bring something different to the party, some differentiation in terms of quality of service, security, reliability, then they have a way to leverage that partnership. And they're continuing to build capacity in their own data centers. It's impressive to see the breadth and depth of data center footprints that most of the global carriers have available to them. So it's almost inevitable that those should become platforms for strong cloud businesses. Who are the leaders? So as we've seen, NTT on a global basis and in the Asian market in particular, Deutsche Telecom out in front, followed by BT in the EMEA marketplace, and Verizon, AT&T far in the North American marketplace with a mention for CenturyLink just because of the strategic thrust, but certainly not on the same scale as Verizon and AT&T, having a different platform. And supplier lead, IBM, Cisco, I would add HP. I would suggest that the marketplace is also pretty dynamic. And so these traditional positions that were based on deploying an IIS infrastructure is beginning to give way to a greater play for systems integration, greater play for software and application-specific delivery, data management delivery. So a lot of the other players are going to come. And then we also have the network infrastructure players coming at a way to play in this marketplace, and would expect to see in future instances a partnership between perhaps some of the infrastructure players on the IT side and some of the network players or companies trying to become both things. So with that, I would like to conclude the presentation, and thank you very much for your time and attention, and take questions.
Great, thanks, Michael, and thanks to those of you who've sent questions through now. We have some specific questions on some slides. If we don't get to those today, for those of you who asked, we will follow up with you. Michael, we had a couple of people actually ask about what's happening in Latin America in terms of percentages and market share. I don't know if you want to address that kind of overall for the folks on the phone that asked that question.
Right, just quickly, Latin America, so it is a slower developing, slower scaling market. That said, many of the regional players that the international players we talked about have the data center footprint there. We see Telefonica very interested in leveraging that adoption rate and ability to really leverage a full cloud proposition is going slowly there. So that's why we have them sort of not highly visible on the radar screen. But we can take that in and give you some specific examples of Latin America if you like.
Okay, so I'll follow up with those folks. The next question we have is, which applications are in focus to be provided via carrier cloud to enterprise, for example, for Verizon and other leaders?
So it's the usual mix. So you start with the traditional, compute services, storage services, and security services being still, I think, the top three. Quickly, then you move to either a horizontal or a vertical flavor. And horizontal flavors tend to be communications-based services, quite a natural fit there, UCaaS and things like that. From a horizontal side. On the vertical side, there's applications specific to the healthcare industry, the services industries, private sector focused applications have been really significant. And the newest flavor I think I'm seeing a lot more development in is CRM and data management applications. And that's also being influenced by folks like SAP who are pushing, and Oracle are pushing their cloud solutions into that market as well.
Okay. Next question we have is, paths for cloud carriers in the future. Where's going to be the business?
So coming back to the carrier cloud statement I'm putting a stake in the ground on here is there is mission-critical application value that the enterprises have not yet unlocked. They will not do so until they can be secure as those guys on the girder in New York, where they feel there's reliability, scalability, security, trustworthiness, and the only people that are going to be able to deliver that level of quality in a hybrid cloud environment, which many of these mission-critical applications require, are the service providers. So long-term, that is their value. It's going to be a tough, challenging market to conquer, but it's theirs to conquer.
Okay. We have another question. How would you position MSOs in the cloud services market versus the carriers?
Interesting. So there's been a significant amount of work with two different flavors there, I guess. So if I'm take MSOs as a mobile operator or a multi-service operator, those would be more likely to leverage the mobility aspect, and we're increasingly seeing mobility as a proposition. Not that the carriers aren't also leveraging mobility as a proposition, but to us, mobility by itself, mobility to do what, right? For what ecosystem, what vertical, and so on. So it's important to understand that there are initiatives going into the marketplace for the MSOs, but the MSOs also have to have a way to leverage the application value. I actually think they're good partners for a broker model for some of the carriers, or for a partnership model for some of the supplier sets that have data center footprint to work from, or applications to work from.
Okay, looks like we have time for one more question. So for those of you who have asked questions that we did not answer publicly in the webinar today, we will follow up with you in email. The next question, Michael, is where does KDDI fit into this market? Will they use their telehouse data centers to house and deliver their cloud platform services?
I'm going to have to get back to you on that one. I think that they will have a significant play, and I think they are on the radar screen. They just didn't make the cut from a revenue standpoint. But I do believe they're going to have be able to leverage their footprint there. But I'd like to get back to you specifically on the telehouse question.
Okay, then we'll have one more. To what degree is data sovereignty location driving business to carriers with in-country data centers?
Yes, I think that it's driving business too. So when you see the theater, particularly, when I think about data sovereignty, I particularly think of Europe and the regulations around data localization privacy. And that does give them a robust footprint of business that's hard for anyone else to conquer. We've seen, of course, operators, not just operators, but suppliers with cloud businesses have to locate data centers at a cost to them of efficiency in the local theater in order to capture that business. But we think the resident operator has the inside track there, because it's not just about regulations, it's about trust.
Okay, Michael, we had a couple people ask about the color coding for the company names on this chart. Do you want to address that, if there is any significance to the color coding?
No significance to the color coding.
Just good graphics, right?
Just so they can be differentiated.
Okay, excellent. So for those that asked that question, there is no significance. So with that, I know that there are several more questions in queue, so to those of you that we did not get them today, please look for an email, either to set up a conversation with Michael or an email answer in the next 24 hours. So with that, I'm going to start to wrap things up. So I want to thank everyone for your time today and for your questions, and thank Michael for the presentation. As I mentioned, I was going to share all the social media links with you at the end of the presentation. So I do encourage everyone to follow Michael as well as TBR on the Twitter handles listed here, and to join our social media conversations on SlideShare, YouTube, and LinkedIn. We are putting up a lot of our free research. If you're not coming to our website to get this free research, we are putting it up on these social media sites. You can download a lot of our special commentaries and the like from those sites. As you're leaving the webinar, there is a short survey, 3 questions. How valuable was the presentation? How good was the presenter? And if there's any other open-ended comments you want to make in terms of how we should, what we should be covering in our webinars, if there are things you want to hear more of, less of, or things we're not touching at all that's valuable to your business. We do appreciate the time that you spend with us on these webinars. We want to make sure that when you do spend an hour with us out of your day, that you're getting the most value out of that time. So if there are things that you want to hear about us talk about, please do let us know, and we'll change the presentations quarter to quarter to make sure that you guys are getting what you need out of these conversations. I'm going to leave the chat function open for another couple of minutes. In case there are any last-minute questions you want to ask or follow up on conversations, set those things up. And if not, when you'd like to get information about getting access to the benchmark, please reach out to either Michael or myself or your sales rep, as well as look for additional webinars that will be coming in the next couple of quarters. So we do look forward to helping you guys with your business processes and strategies in the next quarter, and as well as in 2015. And we look forward to having you on webinars going forward. So thanks, everyone, for your time, and have a great afternoon.